You did everything they told you to do, and you are still losing. The system did not break. It was designed to exhaust you into compliance. It is Friday night. You are staring at your ceiling, feeling completely and utterly drained. You didn't go out and buy a designer watch this month. You didn't take the family to a fancy restaurant. You made your coffee at home. You followed all the rules of the American dream. You've cut the subscriptions, you've skipped the vacations, but the numbers in your bank account are still pointing a finger at you, accusing you of a crime you didn't commit. You feel like you are running on a treadmill that someone else keeps speeding up. That bone-deep exhaustion isn't your failure. It is the invisible tax of an economy that requires your burnout just to keep its gears turning. The system is working perfectly. It is not just everyday inflation you are feeling. There is an invisible architecture built into the modern economy, quietly engineered by central banks and Wall Street, that slowly drains your life energy. They do not want the few $100s left in your checking account. That is just loose change to them. They are aiming for the single biggest asset you have left. Do you think you own your home? Or does your home own you? Look at the person staring back at you in the mirror. On paper, you're the success story. You locked in that 3% mortgage. You did the smart thing. So, why does your checking account feel like a sinking ship? Step into the actual reality for a second. Your credit card balance is slowly creeping up to $12,000. Not from luxury vacations to Europe, but simply because the price of groceries and basic utilities has doubled. The car payment is taking a massive $650 bite out of the paycheck every month. The salary has effectively gone sideways for 3 years when you account for the real cost of living. You are sitting on incredible home equity, but you are suffocating in daily cash flow. The family is growing. Naturally, you want a bigger house. You want a better school district. Looking at the current housing market, trading that 3% interest rate for a new rate over 6% is absolute a financial suicide. You cannot leave. You are practically trapped inside the walls of your own success. You decide to stay and renovate the kitchen, maybe add a room, and consolidate that heavy credit card debt. You walk into the local bank looking for help. The bank smiles and hands you a lifeline. But that is not a lifeline. It is a heavy iron anchor. While you're trying to figure out how eggs got so expensive, a $500 billion monster is quietly growing under the floorboards of American suburbs. It's called a HELOC, and it's the most successful wealth extraction tool ever built. This is what that actually means for you. They are eating their homes. The news says the economy is resilient because you're still spending. What they aren't telling you? You're not spending your salary. You're spending your house. The money flowing through the aisles of hardware stores and into the pockets of local contractors is not coming from rising wages or real economic productivity. It is coming from the middle class, hollowing out the bricks of their own living rooms. An entire generation is eating its own future just to subsidize the present. People are taking the equity they patiently and painfully built over a decade and setting it on fire to fund today's expenses. But how did banks convince millions of incredibly smart, hardworking people to voluntarily sign a financial death warrant? This is where everything changes. The real picture is not on the glossy renovation brochure the bank mailed to your house. It is in the mechanics of a trap I call the two-way extraction system. And once you sign the paperwork, you cannot go back. Imagine being caught in a giant vice grip. The pressure from the top is the Federal Reserve. By deliberately keeping interest rates high to fight the inflation they helped create, they have effectively frozen the housing market. You cannot sell your house and move up because the borrowing costs on a new mortgage are too painful. The Fed traps you in the house. That is the ceiling pushing down on you. The pressure from the bottom is the commercial banks. They know exactly how stuck you are. They market the HELOC not as debt, but as a financial tool. They call it fast cash. They tell you to unlock your home's hidden potential. They brilliantly rebrand borrowing as an upgrade. The bank turns the house into a high-limit credit card. That is the trap. This isn't a helpful banking service. It is a ruthless mechanism for the redistribution of wealth. Their ultimate goal is to convert your hard-earned equity into a permanent monthly interest payment for them. You think you just upgraded your kitchen with your own money. Mathematically, you just rented back a piece of your own house. You rented it at a deadly price that they quietly buried in the paperwork. This is happening to you right now. Every time you see an ad offering to unleash the cash trapped in your walls, you are being hunted. Think of your house as a giant ceramic piggy bank. You have been dropping coins into it every single month for years, building your safety net. The bank is not going to take a hammer and smash it in front of you. That would cause a panic. Instead, they drill tiny, invisible holes into the bottom of it. They slide in one straw for a debt consolidation loan, another straw for a kitchen remodel, and maybe a third for emergency medical expenses. Slowly, quietly, they sip away the liquidity inside until there is nothing left but a fragile shell. Ask yourself, is that new kitchen a home improvement? Or did you just give the bank a key to your master bedroom? Most people miss this fatal detail. Here is what the glowing headlines never explain about variable rates. Did the friendly loan officer sitting across the desk clearly emphasize that a HELOC rate floats? Probably. Somewhere on page 14 in the fine print. You sign the paper when the monthly payment is a comfortable $500. It feels manageable. It feels smart. All it takes is a hiccup in the bond market, a slight shift in macroeconomic policy, and suddenly that payment jumps to $1,500. You did not change your spending habits. You did not buy anything new. Your cash flow evaporates overnight. But that is not the real problem. This isn't a math problem. It's a home eviction timer that the bank set the moment you signed page 14, and they didn't give you the key to turn it off. If you miss those new inflated payments on an unsecured credit card, your credit score takes a hit. If you miss the payments on your HELOC, they do not just close your account. They foreclose. They take the house. It is a perfectly engineered trap. Recognizing the trap is only step one. Refusing to be the prey is the revolution. You were thrown into this maze. It is not your fault. The algorithm built by Silicon Valley and funded by Wall Street is specifically designed to make you feel behind. It is designed to make you crave that lifestyle upgrade, to make you feel inadequate if your house doesn't look like a magazine cover. It is built to keep you borrowing. Throwing off the guilt is not enough. Refusing to play by their rules is your absolute privilege and your personal responsibility. We need to fundamentally rethink what money actually is. Money is not just digits on a banking app or pieces of paper in a wallet. Money is your life energy. You trade hours, days, and years of your limited precious time on this earth to acquire it. When you use a HELOC to buy depreciating assets or to fund a lifestyle gap, you are not just buying wood, granite countertops, or a newer car. You are handing over your future freedom. You are pledging your future life energy to a bank. You are mathematically guaranteeing that you will have to keep running on that exhausting treadmill for another 10 years just to break even. You have to start buying back your life energy, not selling it off at a discount to an institution that does not care about you. How do you take back control in a system that is literally built to extract your wealth from the inside out? You do not need a get-rich-quick scheme. You do not need to gamble on volatile trends. You don't need more willpower. You need a strategic withdrawal from their game. You need to build a fortress they cannot tax, inflate, or interest rate their way into. Stop building their empire. Start building your runway. Your only weapon in this rigged game is a 15% line of fire, a safety buffer that makes you untouchable when the market screams. But here is the line they hope you never draw. The exact threshold where your home stops being a sanctuary and starts becoming a liquidation sale for the bank. Never, under any circumstances, let your total debt exceed 85% of your home's actual market value. That includes your primary mortgage, plus any secondary loans or lines of credit. I mean the real conservative worst-case scenario value, not the inflated fantasy number a local real estate agent promises you during a boom. That 15% gap is your armor. It is the defensive liquidity that absorbs the shock when the market inevitably stumbles. Your home is supposed to be your fortress against the storm. It is where you retreat when the world outside gets chaotic. Do not let them convince you to dismantle the walls of your own fortress just to pay for the heating. The system is counting on you to forget this video by tomorrow morning. Most people will. They'll stay on the treadmill until the lights go out. But you've seen the straws. If you're ready to stop being the liquidity for someone else's empire, stay with us. Hit subscribe to keep your armor thick. Stay sharp. We'll see you at the next truth.